want to speak about is the Employee Retention Tax Credit. That is similar to the Paycheck Protection Program in that it helps employers keep their employees on their payroll. I'd like to let you know that while we have information that we can share with you on this tax law, it's important for you employers to speak with your tax advisors, your CPAs, your legal counsel for help understanding these tax laws as they apply to you and your businesses and your specific circumstances with your business. But the Employee Retention Tax Credit is abbreviated as ERC. And again, it is intended to keep to encourage businesses to keep their employees on payroll in the similar way that the Paycheck Protection Program was encouraging employees to keep their businesses on payroll. This was also a very popular program. It allowed qualifying employers to claim a tax credit for all of the wages that they paid to their workers who they retained during the payroll of the pandemic. So basically, if you made a payment to your employees during the pandemic, you made your payroll, you might be able to get a tax credit from the IRS, which reimburses you for making those payments to your employers or to your employees. This law was firstly enacted under the CARES Act, signed at the end of March in 2020. And it limited the amount of payouts for this up to 50% of the qualified wages that you paid out, which sounds really exciting. 50% of the wages you paid out, who would not love the IRS to give you tax credits for that? But the IRS said, we're going to put a cap on that though, and we're only going to let you, we're only going to reimburse you for up to 50% of the first $10,000 of payroll you give to a person. And so that allowed the employer to get a maximum of $5,000 back from the IRS for payroll made to their employees between March 13th, 2020 and December 31st, 2020. But a lot of employers, at least at first anyways, decided not to take the Employee Retention Tax Credit because the way that the laws were originally written, you could only get either the Paycheck Protection Program, again, 2.5 times your entire monthly payroll that you do not need to pay back at all, as long as you use it for your intended purposes, which is to pay for payroll and also pay your rent and utilities. You don't need to pay that back. Or you could get the Employee Retention Tax Credit, which is restricted to a maximum of $5,000 per employee. Frankly, the Paycheck Protection Program got employers a lot better assistance, and so most employers decided to go to the Paycheck Protection Program because the law initially said that employers must choose one or the other, but cannot choose both. That caused a lot of problems for very struggling employers. That was later changed. It was amended by the American Rescue Plan Act, signed in March of this year. And it said that employers who claim Paycheck Protection Program loans can also claim the Employee Retention Tax Credit for qualified wages that are not considered payroll costs when obtaining forgiveness for the Paycheck Protection Program loan, retroactive all the way back to the beginning of March. Of course, this is a very simple summarization of very complicated tax matters, so it's important that you speak to your tax professionals about how this Employee Retention Tax Credit might apply over to you. Right now, this Employee Retention Tax Credit has also been extended over time. It currently is available all the way through December 31st of this year. And in 2021, it is capped at 70% of qualifying wages. So not 50%, but 70% of qualifying wages. Of course, the $10,000 maximum does apply, but it applies per quarter in 2021. So thus the maximum Employee Retention Tax Credit for an employee is $7,000 per employee per quarter, up to a total of $28,000 per employee in 2021, which sounds excellent. But the eligibility requirements for the Employee Retention Tax Credit are very stringent and tight. And frankly, you do not want to be an employer that needs to take this type of credit. However, many employers do, and we're very thankful that it's available. Firstly, in order to qualify for this, your business must still be fully or partially suspended due to COVID-19, requirements from the local or federal government that would restrict your business from operating. You also needed to show at least a 20% or more decrease in your gross receipts compared to the same calendar quarter in 2021 to 2019. So we hope that none of you employers are in that boat, but if you are, this might be a credit that is available to you. And again, we recommend that you speak to your tax advisors about this credit and how it might apply to you and your specific tax situation.